I'm Lisa Federico, and this is Inside Northwest Columbus. After spending decades in corporate marketing, I traded boardrooms for backyards because the best stories are happening right here at home. Every week, you'll meet entrepreneurs, creatives, and everyday neighbors doing extraordinary things across Worthington and Northwest Columbus. So let's jump into this week's conversation. Welcome to this episode of Inside Northwest Columbus. I am so excited because I have one of my dear friends with me today, Nate Daugherty. Nate, welcome to the show.
Good to be here. Appreciate you having me.
So glad to have you here. Full disclosure, Nate has been my financial advisor for going on, 10 years now. It'll be 10 years, yeah. And
time flies when you're having fun.
Oh, I'm telling you. But one of the things that I value so much about our relationship is that you have been through all of my ups and downs, right? And we all have them when it comes to financial health, right? Or unforeseen circumstances. And you have been such a great resource for my entire family, my kids, my ex, my outlaws. I mean, I am just so grateful for that. And I firmly believe that the kind of partnership that we have, I think just has been incredible. And it's really been a successful partnership from a financial standpoint. And I would love that for everybody because I don't know that everybody has that.
I appreciate you saying that. And we do make it a very high priority within our practice to be as involved as we can within our clients' lives. We're not just here to sell products or to be, investment managers. We're here to be a part of the family, essentially.
Right.
And multi-generational planning is important to us too. So we want to know everybody in the family, and be, as intimately intertwined as we can be from a financial standpoint.
Right. And I love that I can just pick up the phone and call you whenever I need to. I know now we have new rules where we can't I can't give you any.
Follow the compliance
rules,
but
lots
yes.
of compliance, we've gotten through it together. Mm-hmm. It's all been great. And I just want more people to experience that. I've also had, since I was 21, other financial advisors as well. And that partnership is just so important. But I want to ask you, did you always want to be a financial planner?
Nope.
Were you one of those math nerds? How did you get into this?
Never wanted to be.
No? But you are now.
My first career was in broadcasting. I worked at local TV stations, and that was kind of my goal, was to go into sports broadcasting. I did that for about 6 or 7 years. I did a lot of local high school, college sports coverage, and it was a fun career. I enjoyed it. I had a great time doing it. Ultimately, when we started to talk about marriage, family, kids, I realized I didn't want to be working every night until midnight. I didn't want to be working every weekend. And so I started looking for other opportunities. My father was financial advisor, my brother, my aunt. So everybody actively at that time was in the financial advising industry. And I started just asking them questions about kind of what they do and whether or not it could be potentially a fit. I explored a lot of other opportunities, but ultimately, I kind of felt pigeonholed because my only experience in education was in broadcasting. That was it.
Right.
And so my brother finally just said, well, look, my practice is growing. I need a grunt worker. If you want to learn this industry, you can come do it, and I will pay you very little to do it.
Yeah.
And I said, you got yourself a deal.
Well, yeah, because you're broadcasting, right? You don't make that much as well.
Yeah. I had to make a kind of a life decision. Yeah. I was about 30, and I'd kind of put a timestamp on it. Like if I hadn't progressed in my career to where I thought I wanted to be, I wasn't necessarily willing to sacrifice family and lifestyle for that career anymore. So I went to work with my brother, and honestly, it was probably the best decision I ever made because, one, he was an excellent teacher in terms of bringing me into an industry that I had no idea what I was doing, and two, it's just created a wonderful opportunity for me to have the life that I wanted to have, which was family, kids, flexibility,
and you never would have had that in broadcasting.
No, it doesn't matter
it's
how.
Something we have in common. We both come from TV background.
Yeah, it doesn't matter how big you get in broadcasting. You're always going to be there,
right?
At the times where normally you would be with your family.
Exactly right.
Yeah, so that's kind of how I ended up venturing into this career, and here I am.
Were you always math oriented?
Oh yeah, the number side of it was never a problem. So I mean, I always enjoyed when I was in college, for example, I was in broadcasting, but my electives, I took all kinds of math courses, right? For me, it was fun. I enjoyed that, right? So
you're so weird.
I mean, I am a complete nerd. That's not the problem.
It's so interesting though, because most people who are creatives are not the math folks.
Yeah.
So you've got both sides of the brain going.
I think in equal parts. I'm not overly creative or overly the other way, right? I kind of fall somewhere in the middle. But yeah, math always came natural to me. So from that standpoint, coming into it, I felt confident that I'd be able to understand the concepts that this industry requires you to know. But the more that I get into the industry, the more that I realize it's, and I've now known this for a long time, but it's more about relationship building. It's about understanding who your clients are, what they want, what they need. And the numbers are the numbers. Most of my clients, our conversations, we don't talk about that much about percentages and,
Right.
It's more about what's going on in your life and how can we help.
Right.
I think the interpersonal communication skills that you gain through something like broadcasting actually were immensely more valuable than me understanding any type of, mathematic equation.
Right. Well, one of the things that I love is that when we meet, right, we talk about how politics or how things in Europe or wherever, Asia, are impacting our economy, and that therefore impacts many times our investments or what have you. But you're able to speak to it so eloquently so that a normal person could understand, right? I just love the explanation. For me, that's a big part of what I need as a client.
And I think a big part of our job is taking sort of complex economic data that, again, as nerds, we love to look at it and analyze it and stuff, but then breaking it down into just everyday language. So the communication style that you have with your clients is really important. I can tell you if I go into a tangent, which sometimes I do because I'm fascinated by it, but like every now and again I'll catch myself. Like if I'm in a meeting and I start going down this tangent of really like what I think is fascinating economic
and you see
data,
your clients glaze
my clients
over.
are like,
I never know it.
So I try to prevent myself from doing that, and I try to focus most of our attention on just what's happening in your life and what's important to you.
Yeah. Hey, quick break. May is our women's issue, and it's one of the most meaningful months of the year for us. We are featuring women in our community who are doing incredible things, leading businesses, raising families, building networks, and creating impact in ways that matter. On the podcast, we go beyond the surface to talk about the real journeys behind that success, the decisions, the challenges, the support systems that make it all possible. If those are the kinds of stories that resonate with you, make sure you're subscribed. You can dive into the full women's issue through the link in the show notes below. The industry has changed so much.
Yeah.
Like I started with a financial planner when I was 22 years old. Best decision I ever made. But back then it was all about like where you're going to invest. Talk a little bit about this change, because we've had like this major tidal wave of change as it relates to financial advisors, planners, that whole segment.
Yeah. Yeah, so I think the biggest change is probably most simply referred to as like the fiduciary standard, right? That's a term that's been thrown around a lot in the last decade, maybe more. I think previously, and I kind of have a unique perspective on this because I'm a third generation advisor. So my grandfather started in this business back in probably the 40s. Fun story, side note, he was a door-to-door salesman for CDs, so just certificates of deposit.
Oh my gosh.
And he only had one leg. So imagine a
wait, I don't mean to laugh. I'm sorry.
No, it's funny, right? It's ironic.
Door to door.
He's door-to-door salesman back in probably the 40s, 50s, and he was selling families CDs. This was before financial planning ever even became a thing. Like financial planning is a very new industry, right, relative to human history. And so back then he got into it because he lived in an industrial town. He wasn't allowed to join the army, even though he tried. He was a stubborn guy.
Right. Well, he had one leg.
He had one leg.
They wouldn't take him.
Right. He tried to go into some of the industrial industries that were in his town, and there was nothing there. So he looked for other opportunity. He became a salesman. Right. And so anyway, back then, the only thing you could do was sell CDs. That was the only thing that existed because our industry hadn't really evolved yet. Right. Like you could own stock, but that was kind of like for the the elite, right? Not the average person didn't really own.
Oh my God,
stock.
I can only imagine the paperwork to buy stock.
Oh yeah, yeah. Back then it was paper certificates, and then they mailed you your dividends. And anyway, things have changed since then. But the things have evolved. So he started selling CDs just door to door to families. And then when my dad got into the industry, that was back in he's probably been it since the late 70s, early 80s. Then it became selling stock investments through mutual funds and through things like REITs or some of the illiquid type of investment structures where you buy into some private equity funds, and it was mostly a commission-based industry, right?
Right.
And it was basically just like you hustled, you sold, right? And then as my brother came into the industry, that was like the point where the metamorphosis was happening, so to speak. When my brother got started, that was around the late 90s, early 2000s. I was still in school at that point, but that's when you started to see the shift from a commission-based, sales-based industry where we were just helping people save, like with no end goal. It was just like save your money and invest, and we're going to sell you the product to do it, right? And then it became more of this, well, is this actually right for me? Should I actually own these stocks or this type of investment, right? And then it became understanding your client, their full financial picture, everything that's going on with them to make sure that you're actually using the correct investments. So instead of sales, it started shifting to service, right? So then the service model became the product. The investment is just a byproduct. So essentially what we've seen, especially in the last 10 years or so, is the fiduciary standard has now taken over, which basically means you as an advisor, are you acting in my best interest as the client? Not are you trying to sell me something that earns you a commission? And so I'm eternally grateful, again, that I started working with my brother because he was an early adopter of that model. Because the transition was murky, right? There was this time period where there was still a lot of commissionable work, still some advisors that were transitioning over to that more service-based model. My brother basically took the approach that he kind of saw the writing on the wall and he said, look, I see that service is the basis of our industry moving forward. And if you can't be really, really knowledgeable on a lot of different things outside of the investment products, you are going to be left behind. And that is, in fact, what has happened, right? So even if you look at some of the do-it-yourself firms like a Fidelity, right, which is basically you can go there and invest for free. Their big pitch now is to work with a financial advisor, right? Because the advice is now the product as opposed to the product being the product.
I see what you're saying.
So that's the big evolution I think that we've seen in our industry, which is ultimately a good thing because now we're working with families just like yours where we know you, we know the parents, the kids, the grandkids, we know everybody. We're working with you to put together a plan that's not only for you, but for the rest of your family. Right. So it's been a good thing on both ends. For the client, you get a way better experience overall, right? You are actually getting the things that you need, and we're adding extra alpha is kind of the word that we use in our industry. Alpha is like return above and beyond the expectation, right? The advisor alpha is not in the form of the investments; it's in the form of the overall analysis. Right, the full
whatever
picture.
The goal was, or
whatever
the goals
goal
are.
is. Yeah. So now it's like we're investing with a goal in mind, as opposed to just selling you a product. That's kind of the big evolutionary shift of our industry. It's been happening for a long time, and again, I don't know anything different. I came into the industry assuming that's just how it was done, and it's only when I talk to older advisors who are like, "You have no idea, dude." I mean, my dad still tells me about. He's like, look, I had to support the family. I had to sell. Right. And so he's like, I would be at clients' houses till 9, 10 p.m. at night just on sales calls, right? And the model is just terribly different now.
Right.
But it's for the better.
And it was more like insurance sales.
There was a lot of insurance involved. So like insurance annuities. And then like in his case, it was a lot of mutual fund sales. So it used to be if you sold a mutual fund and somebody, let's just say you bought $1,000 of a mutual fund, right? The advisor would receive a commission on that purchase every time you bought. Well, now the industry has shifted where there's really no commissions still exist, but there's no more commissionable products for the most part. It's all part of the overall investment portfolio. We can buy and sell and trade as much as we want to. It's all part of our sort of our managed platforms where we charge a flat fee as opposed to commissionable products, right? Our only incentive is to make your accounts grow.
Because that's how you get
Because that's how
paid.
we make more money, right? So it's a mutually beneficial scenario where you have basically a flat fee applied to the account, percentage stays the same. Our only objective is to grow that account, right? For both your benefit and selfishly for our benefit too, right? But that's just because if you have a 1% flat fee, 1% of a million is a lot more than 1% of 1,000.
Right.
So.
Well, and I'm always surprised at people who are like, oh, I'm just going to do it myself because I'm not paying somebody to do it. But in this day and age, I mean, you got to be almost an expert and have your eyes on everything in order to make the right decisions.
Mm-hmm.
I just don't understand how people DIY this, and it's not their full-time job.
Well, the DIY thing is always a debate, and actually stats show that most of the majority of people are actually DIY. So like it's actually like 60% of Americans, at least is the rough number, are actually DIY. That's a skewed number though, because there's a huge cohort of that number that is retirees, let's say, who live on Social Security and don't have much to invest. So they're considered DIY, even though maybe they're not actually DIYing anything. There's just not that much there to actually invest or to plan for.
Right.
But there's still a large number of people that do it. Now, the one thing I will say is that you can be a very successful passive investor, right? So passive investing is basically saying, look, I rely on the markets to basically do their thing, and I'm not going to touch it. There's another really good industry from Vanguard, or a study from Vanguard, where they actually did research into all of their individually owned accounts by DIY investors, which Vanguard is mostly a DIY shop.
Okay.
So they just said who had the best investment returns of all of our individual accounts that we have out there, and they've got billions of dollars to research this with. Well, they actually found that the best returns came from investors who had died and nobody had claimed the account, right? So dead investors had the best returns. And why is that? Because they didn't change anything. They didn't let emotions get the best of them. They didn't sell at the wrong time. They didn't buy at the wrong time. They just let it go. And Vanguard is built on the indexing philosophy of, if you want to do it yourself, do it simply, index it, don't touch it, right?
Yep.
Now, the other thing that they found, though, that's interesting to your point, is that most people who were living actually had terrible returns. So they did a comparison, and this is interesting because it was from Vanguard. Vanguard is promoting their own product, their own DIY structure, and they were basically saying, look, we found that dead investors were the best because they didn't panic at the wrong times.
Right.
We found that living investors stunk because they panicked at the wrong time, and those who had advisors were somewhere in the middle where they actually did relatively well. And it was largely because of, we call it advisor alpha, where you can call your advisor and they're going to say, yes, the markets are going down, but don't panic. Here's why. We're going to stay the course. And so largely what they found was that typically the advisor alpha, they averaged it out to somewhere between 2 and 3% of extra return that you get on your portfolio annually simply by working with an advisor, right? So if you take that number and you extrapolate it over the course of, let's say, 30 years, and you had a $1 million pot of money in your retirement and you got an extra 3% on that every single year simply by working with an advisor, could you justify that the cost was worth it to go work with that advisor? Absolutely.
Yeah.
3% compounding over 30 years is a huge number, right? So to your point, yes, there is value in working with an advisor. A lot of it is behavioral. It's not about us absolutely picking the right stock at the right time all the time. Our job is largely, and this is another, I think, shift in the model of how we work with our clients. We do so much work with our clients in terms of just looking at market scenarios and helping clients navigate it by just making the right decision from a broad perspective. Right. Don't sell now or don't buy now, right? Even just this morning, I had a call with a client before I came in here, and she said, hey, I'm a little bit nervous about what's happening with the Iran situation, and should we be making any changes? And I said, look, the only thing that you should be doing in times of market stress is looking for opportunity. This is where you create wealth, right? It's not where you want to destroy wealth by actually selling a good investment and not letting it rebound. So we talked about where are there opportunities for us to actually go buy something right now as opposed to selling out of something that we're nervous about.
Yeah, and that makes perfect sense.
Yeah.
I want to transition a little bit because I want to talk about the impact that technology has had on this industry. We were joking around about how years ago in the 40s or the 50s or the 60s, when you wanted to buy stocks, all that paperwork and the mail back and forth. But today, it is so much easier to do it. The technology that's available and the visibility that we have. Problem is that we all have other jobs. This is not our full-time focus, which is why some of us need people like you.
Yeah.
But now with AI, I just feel like this industry has just kind of opened wide with the technology that's available and its impact that you can have on clients.
Yeah, I think it's impactful for both clients that we work with as well as the DIY investor, right? So I'll start with the DIY investor. We were just on vacation 2 weeks ago, and I sat down next to this guy at the pool, and we started having a conversation. And who are you? What do you do? Where are you from? Right? And I told him I was an advisor, and he said, "Oh, I've actually been doing some of this myself, and I've had luck using ChatGPT to tell me what I should or shouldn't buy." And he goes, ironically, I posed the question to ChatGPT, like, what sector should I invest in going into 2026? And it said, we believe you should own, I think it was energy stocks, and I forget what the other one was that he said, but it was two sectors that actually have done exceptionally well with the current economic environment.
Right.
And he's like, but now the question is, should I sell them? What do I do now? Right. So like, they can't answer every question, but it can give you certain insights into what might happen. Now, that's also one where I can't attribute that to actually technology being correct. It was correct for the wrong reason. It didn't know that we were going to go into a sort of a drawn-out battle with an oil-producing country. So, but anyway, the technology is there. It is helpful to DIY investors who are looking to do it themselves with a lot more information and be much more confident about the decisions they're making with the investments.
But it's a very interesting point because we're using AI, ChatGPT or what have you, for everything right now.
Sure.
And it is almost like talking with an advisor, right?
Kind of.
And so I can see how people would want to just use ChatGPT Teresa to talk about, right?
Sure.
What should I invest in? What should I do? But the point that you brought up is that it's not always forward thinking in terms of what do we think or what do we predict, right? That either the markets will do or what events are going to come up that.
Yeah. And technology only goes so far.
Right.
It's certainly not forward looking. Again, like I said, that was correct by mistake. Right. Who knew? Nobody knew that was actually going to happen.
Right.
So I think that technology has become exceptionally useful for us in our industry because, like when I started, right, I distinctly remember the first meeting I ever had with a client. I sat down with an Excel spreadsheet, right?
Yeah.
Pulled up on the computer, and I was manually typing in numbers, and then I had created this spreadsheet that would do its own little calculations of like time value of money and like, here's your current net worth, and what if we extrapolate this over to, I'm a super nerd. Yeah. So, but back then, like we had software, but the software wasn't great.
Yeah.
Right. So it was, I like built my own spreadsheet to kind of do this thing that I wanted the software to do. Right. So that could happen very quickly, like in real time as I'm plugging in numbers. And so that was like my first meeting was literally sitting down with a spreadsheet and just, going through it that way. Now I can plug all those numbers into our software, and immediately not only will it give you like the current scenario, the long-term projection, the inflation assumptions, the return assumptions, all that stuff naturally built into it, but it also has AI built into it. So, and this is pretty recent. So this is just within the last year or two that AI is really getting incorporated into everything we do. But I have we use eMoney, which is one of the bigger providers of financial planning software that's out there. They've been around since 2000. They're kind of one of the early adopters of planning software. So they've been around forever, but the actual usefulness of the technology has expanded exponentially just in the last couple of years. Now there's just a button that I can push that says optimize. And it's like, take this person's scenario. We've plugged in some goals. We know when you want to retire. We know how much you want to pay for your kids' education. We know that you want to buy a new house in 10 years. Optimize their portfolio and their plan. And it will spit out a bunch of assumptions and projections and recommendations on what we should do, right? Now, it's useful. It's a good starting point, but it still doesn't know you. It still can't account for human emotions.
Which is why the relationship is so important.
Yeah. So like, I think there's always sort of a symbiotic relationship between technology and human, technology and advisor. I never say never anymore because technology is expanding at a sort of a mind-blowingly rapid pace. And could my job be replaced entirely one day? Maybe.
Perhaps, yeah.
Maybe, but I still think there's a human-to-human connection that most people seek who are seeking an advisor, right? But the technology has made it much easier to much more quickly and efficiently deliver high-quality information to a client that allows them to make decisions quickly with confidence. Yeah. So like just a random example, I did the same thing for a client maybe 3 weeks ago. They said, hey, we think we want to pay off the mortgage of one of our rental properties so that it can start generating more income for us. But the mortgage is only like 3%. So like, do we really want to pay that off versus keeping the cash? And I basically used the optimize. It's like the easy button. You remember the easy button?
Yeah.
It's like the easy button from Staples. I think it was Staples.
Yeah, it was.
So it's like I hit the easy button.
That was easy.
And I just said, run the scenario of paying off this mortgage. Immediately it said, over the course of your lifetime, this will actually save you X amount of dollars on the interest. It will increase your portfolio returns by this much. And then it will actually cost you money on taxes because you're losing the deductibility of your mortgage interest, right? So all of a sudden it could spit out all that information and it could say net, right? We gained, we lost. Did it actually improve your scenario over the next 40 years of your life? And ultimately it ended up that it proposed it would increase their portfolio value by $150,000 over the course of their lifetime. So they could immediately just look at that and say,
no brainer.
I think we answered our question.
Right.
So,
but that would have taken you without that technology.
Hours and hours. So I was just looking at this actually this week. I have another client who has worked in Silicon Valley for a lot of these startups. He's heavily intertwined in AI and he's a coder. So he's kind of like coded himself out of a job, more or less, right? Like that's the fear amongst all the software companies right now. But he was showing me this one website that he tracks and it shows the efficiency of AI and of ChatGPT or Claude or whatever one you use. It is currently doubling its efficiency every 7 months, right? So we go back to 2021, I think, was when these models first started coming out. By 2025, it can now do 10 hours of work in a matter of seconds, right? So I put that calculation, right? That normally would have taken a human potentially as much as
I can't even imagine.
5 to 10 hours of work to do a full analysis, to run through all that. It's now doing it in a matter of seconds. So again, that's why I say, could I be completely useless a couple years from now? Maybe.
Yeah.
I don't know.
Didn't get the magazine at home? No problem. You can read it for free by signing up for our digital issues. Just head to the link in the show notes. And hey, if you're just listening to this episode, did you know that you can watch it too? Catch the full video on YouTube using the link below. But what's so interesting about that is that you have, through NDF, through your company, you've got all of these different types of systems to be able to provide valuable input. That's not something that I think the regular Joe is going to have, right?
Yeah.
Or the DIYer is going to have. So you're able to more efficiently serve your clients because you have access to this level of speed and accuracy.
That's the big thing, is that it gives us the ability to very quickly run these very accurate projections of your financial scenario. And again, I've always said that a big part of our job is helping educate our clients around what's happening, all the moving parts and pieces, how does it all work together?
Right.
And then you make a decision based on that. And if you can give your client very clear and concise information, and it's not sort of like high-level theoretical,
right?
Like in the past,
or I might gamble.
In the past, I might have looked at that house scenario, and I would have said, well, like you're paying X amount of dollars in interest every year. It's saving you a little bit in taxes, but I think if you pay it off, I'm like, it would probably benefit you in the long run. Probably. I'm making a rough guess just based on
right.
kind of
and there might be some things that you don't know that you don't know, right?
Yeah, exactly. Yeah, like the software picks up on things that I might not be thinking about.
Right.
So that's where it's very useful. Is that it's very quick, it's very efficient, and it's very accurate. Now you still have to know. I think that you still have to nudge the software in the right direction.
Right.
So I think
but that's
again,
where your expertise comes in.
That's where the symbiotic relationship occurs. Is like if the software spits something out to me, and I'm like, that doesn't look right, right? And it does that.
Yep.
Right? They call it hallucinations, right?
Right.
This software, it can hallucinate. It can pull information from places like the internet is vast, and it's got some crazy information out there.
Yeah.
It can pull information from anywhere. So we have to be able to decipher whether or not it's actually pulling the right information to use for our clients. And we have to guide it to get us to where we want it to go.
Yeah. Let's talk a little bit about the pillars of investing, because that has changed as well.
Mm-hmm.
Like you had said, it used to be about creating wealth, but it's also about minimizing your risk.
Yeah.
And kind of looking holistically at the whole financial picture. And I'm not so sure that maybe people recognize that this is what financial planners do. They don't just look at how much you should invest or buy, or you're looking at things like insurance and estate planning, and there's other things. Talk a little bit about that.
Yeah, I mean, it all flows together, and you can't have one without the other. So when we start working with our clients, like a lot of times we'll get questions from clients like, why do you need all this information? I'm like, well, I can't tell you what to do unless I know all of the information, right? Great, if you're doing an awesome job of saving, but you're 35 years old with 3 dependent children and you haven't accumulated enough, well, you're going to need to buy insurance, right? And we often see underinsured younger people with dependent children.
Yep.
Or if you've done a great job saving over your whole life, but you never built an estate plan, well, that's a problem, right? I have just one quick example on that. Like I had a client who very sadly passed away prematurely. He had done a great job of saving over the course of his entire life. He just had one son, and his son was the one that was going to inherit his entire estate. He hadn't put together an estate plan, even though we had talked about it many years, and it was like, that's in the future, right? So we viewed that as like an important thing, but not urgent, or at least he had at that time. So he ended up coming down with an illness that quickly limited his lifespan. Fortunately, we were able to quickly coordinate with an attorney, put a trust together, put a will together, put an estate plan together in a somewhat quick fashion.
Right.
Right. And ultimately, now we still serve over the trust for that child now 8 years later. Right. But basically, that one missing piece, had we not put that in place, it would have been an absolute disaster. There was one thing that we couldn't get in the trust, right? And it ended up going into the custodial courts, and it's still run by the custodial courts. And to try and do anything for that particular account is a huge nightmare, right? It takes so much paperwork and processes and things like that. So if you let that kind of stuff go, all the stuff that you did to build all that wealth, it becomes a pain for the next generation, right? So there's so many different things that we look at, right? And essentially what we're doing is wealth accumulation, but you also need protection. You also need that long-term plan. So one without the other, it doesn't work.
I get it.
It doesn't work.
And again, I know I'm a broken record here, but the relationship is so important. If you don't have that level of relationship with your financial planner, you're missing the boat. It's just so critically important.
Yeah. And it's hard for technology to accurately weave all that stuff together.
Yeah.
You kind of have to have somebody that knows a little bit about a lot, right? Yeah. And that's kind of how we view ourselves as modern financial advisors, as your one-stop shop for everything financial.
Yeah.
So that's really what we strive to be. And like you said, we're there to answer the phone call anytime and to provide you with perspective and to do it in a way that incorporates every single piece of the equation.
Yeah. Nate, tell us a little bit about NDF and where people can get more information about you.
Sure. So NDF is our current company name. We actually just recently transitioned. We went from one broker dealer to another, and we're a small office of that broker dealer. So we operate very much as like an independent practice, which is kind of what we wanted to do. We were very excited about having a lot of freedoms and flexibilities and gaining access to a lot more tools and technologies that we can use with our clients as a result of this transition. So we just recently rebranded ourselves as NDF Advisors. We're excited about that. But you can just go to our website. It's ndffinancialadvisors.com. We've got all our contact information on there, and you can check us out. The website's relatively basic right now. That's been like our back burner thing. So we just started this transition process at the beginning of the year. So hopefully we'll have some more content and information on there as time goes on. But as of right now, that's where you can find us. That's where you can contact us.
Awesome. Nate, you've been an incredible guest. Thank you so much. Thank you for the work that we've done together. I'm so appreciative.
I'm happy we could do it. Happy to be here today. I appreciate you having me.
Well, you're a wealth of knowledge, and I just so appreciate the work and the partnership as well.
Thank you.
You're very welcome. That is going to conclude this episode of Inside Northwest Columbus. Please join me next week. We are focused on investments all month, all things investment, whether it's your home, your health, or your financial outlook. Until next time, we'll see you soon.
Boxland Media. Think big.